Good morning, everybody. Thank you for joining today's webinar. My name is Mykantas Urba, and I am Head of Corporate Finance at Orion Securities, which is an investment bank organizing Sun Investment Group bond placement, about which we want to talk today and tell you all the story, both about the securities and about the issuers, and reasons why investors should invest in this debt instruments. So today with me, I have my colleague Simas Žirgulis, and in our office, we have our guest, Davidas Varabauskas, who is a founder and CEO of Sun Investment Group. And before giving floor to Davidas and allowing him to present the whole group, I want to make an investment summary about the bonds currently we are offering. So at the moment, we are placing up to 5 million euros of bonds, which are relatively short-term bonds, only 12 months maturity. The bonds are offering investors fixed interest rate of 13%, which will be paid semi-annually. Bonds are secured with a collateral. The collateral is first-rank pledge of Italian subsidiary companies of the group, which control the portfolio of 340 megawatts of solar development projects, which are as well based in Italy. These projects are in different development stages. We will cover in more detail later. But one point to stress that according to the internal group's valuations, at the current stage, this collateral is worth around 12 million euros, which when talking about important credit ratio, loan to value, makes this bond loan-to-value ratio of 0.4, which we see as rather attractive and, well, offering good security. Regarding the proceeds, so the proceeds will be used by the group. This is actually the first bond issued on a group level. Issuer previously has issued private bonds on a project level, so different subsidiaries owning projects in Poland. But this is the first debt security issued on the group level. So the proceeds will be used for the group needs, and to be more precise, to finance further development of the projects with an aim to increase number of solar projects which have reached the ready-to-build stage, and as well focus on already construction of solar power plants, which is planned to start in early next year. Regarding the old term sheet, which you see now in the table, what's important to stress that to increase the security of bond investors, not only the collateral is used, but we have also put in place several special undertakings, so covenants. There is a limit on dividends. The group cannot pay out dividends till the redemption of the bonds. Of course, naturally, there is a restriction on disposal of pledged subsidiaries, as well as a restriction to take additional financial debt on the pledged subsidiaries. These two covenants are in place just to secure the value of the collateral and make sure that the net value is not decreasing till the redemption. Also, since as I mentioned, the issuing entity is the holding, is the main mother company of the group, we have put in place additional covenant restriction to sell. So to change control of key subsidiaries, which are basically development companies in Poland, in Italy, as well as construction company in Lithuania. So these are made in place to make sure that all the value creation and all the cash flow generation arms of the group are in place till the redemption. Regarding the dates, the subscription period spans till 24th of November. The form of the issue is a public offering. One important detail that it's a public offering both in Lithuania and in Estonia, which of course means that these securities can be offered to a wide range of investors. In addition to that, also minimum amount of investment is not limited. Investors can invest as little as one bond, so 1,000 euros. And also what public placement gives which opportunity is listing. After the end of the placement, the plan is to list these bonds on a First North alternative market of NASDAQ. It will be listed in NASDAQ Vilnius, but nevertheless, as you know, it doesn't matter is it Vilnius, Tallinn, or Riga. The secondary trading opportunities are available to all Baltic investors. So before starting presentation of the group activities, we as investment bankers who are organizing the issues looked into this bond and of course pointed out what key investment highlights we are seeing, so and the reasons why we think this bond is of high value and should be interested to investors. First of all, Sun Investment Group, it's not a new player. It is a very experienced player in the market since 2017, and we have experience in both developing projects from greenfield stage, constructing projects, managing the sale process, so covering all the value chains of solar development activities. Also important factor that the main markets the group is focusing, it's Poland and Italy. We will touch on it later on, but Poland and Italy regarding renewables and solar energy especially are of the most interesting markets in Europe due to structural reasons, due to limited possibility to generate clean electricity from other sources. So basically, which makes the experienced player placed in the right markets of Europe. Second point is strong financial position of the group. The equity value of the group in the first half of 2023 is equal to 9.5 million. So, which makes the equity ratio around 20%, quite good level. And also, what's important to stress that the company's portfolio under development of solar assets is equal to 2.7 gigawatts. So it's a very large asset base. And according to internal valuations, the current market value of all this portfolio is larger than 80 million euros. Despite on the balance sheet, it's represented at cost value. The projects are, the group has rather advanced projects. 200 megawatts are already ready to build. And as I mentioned, in next year, 60 megawatts will be started to build. So these are the reasons, why we see this value creation materializing in a relatively short term. Of course, the whole sector, renewables, solar energy, it's of key importance for Europe, both to end still continuing energy crisis and both to gain independence. We have regulatory initiatives to make development processes more attractive and easier. And also this asset class is discovered already by both financial investors, institutional investors, and strategic investors. In Poland, it's rather hot market, the sale investment into solar energy plants. And finally, of course, we hold debt instrument. We see that it is offering a good return to risk ratio. First of all, it's a short-term debt instrument, so limiting what can go wrong, which is an issue for long-term maturities. If we have, for example, 5-year bonds, and 13% fixed interest rate offered, secured with a pledge of portfolios under development. We really see that it is a good investment case, offering good return versus the underlying risk. So that is a short introduction to the security. And now I give floor to Deividas, who will proceed with description of the business of Sun Investment Group.
Yeah, so hello everybody. I'm the founder and CEO of Sun Investment Group. So I will try to introduce the company in comprehensible terms. So in a nutshell, SIG is a vertically integrated solar project developer. We are located in 3 markets currently, where we have business activities. Poland and being our main market, but Italy gaining traction as well, and Lithuania historically, and also because, I'm from here. So we had to do business here as well. We have around 100 people currently working in different segments of the business. So from greenfield development, meaning that we find land by ourselves, obtain all the permits by ourselves as well. Then we build the project. So we have teams of engineers, project managers, construction managers, and then we sell the projects, and we stay in those projects as O&M provider. So we are taking care of the projects throughout their whole lifetime, independent on the fact of who in the end is owning the project, be it ourselves, external investor, or end consumer. As Mikantas has already mentioned, we currently have 2.7 gigawatts under development in Poland, Italy, and Lithuania. We own 100% of those projects. They are not joint ventures. They are 100% owned by us. Up to date, from 2017, we have fully executed more than 200 megawatts of solar projects, which have been developed, built, and sold. We've done that in UK, Poland, and Lithuania up to date, with a majority concentrated in Poland. And we plan to carry on with the same activity and with the end goal to keep as much of operational assets on our balance sheet, in this way transforming ourselves into independent power producer. Let's go maybe to the other slide. Okay, so briefly here, as you see, we started in 2017 by doing a small transaction, acquiring a 2 megawatt ready to build project. We then structured everything that was necessary around it. So construction financing, EPC contract, and we then put the operational project in the market and sold it to an institutional investor from Germany. Then we carried on by setting up a joint venture together with a Spanish EPC company in Lithuania to take advantage of some direct subsidy schemes to end the energy users in Lithuania that were provided through different instruments to all sorts of high energy consumers, industry, commerce, you name it. So we've set that up. We also at the same time acquired 43 megawatts from a local developer in Poland, which is now a leading IPP in Poland and also one of the leading ones in Europe. It's called R-Power. At the same, like within a year or so, we acquired further 66 megawatts of ready-to-build projects from another Polish developer that is now owned by Equinor. We built those projects and successfully exited them. In the meanwhile, we discovered that developing projects in-house is not only a tool that allows us to achieve savings on project acquisition, but also it's like a guarantee that we will always have access to projects when markets become very competitive, and they always do. So we've set up a development team in Poland initially, and that team has grown our portfolio to more than 2 gigawatts that we currently have from the end of 2019, more or less, when we started that. Then through that time till today, so we successfully exited the 43 megawatts to Aberdeen Standard Investment, one of the biggest asset owners in Europe. I think 700 billion under management of assets under management. So that gave us an opportunity also to fine-tune our internal processes as the, let's say, quality requirements on technical level, but also on the transaction level were really high. So we learned a lot through that transaction and got ready to carry on in the big business segment in renewables. So yeah, so fast forward to today, we've been mentioned a couple of times as one of the top developers, PV developers in Europe by Solar Plaza. And yeah, we did one more transaction of 24 megawatts that we acquired in the market, built it and sold it fully operational to Alternus Energy, a listed IPP from Norway. Yes, and since that transaction, we have focused mainly on maturing our own pipeline projects that are developed by us exclusively and expanding the volume of the projects that we are developing.
Yeah, just short interruption, but I see that questions are being already written, but I encourage all the attendees to submit the questions on the go in our Q&A field, and yeah, we will answer them after we finish with presentation. Yeah, please proceed, David.
Yeah, so as I've already mentioned here, so we could say that development could be split into two phases, which is greenfield development, which is mainly about land and all the necessary permits to build the power plant and to connect the power plant to the grid. So this is a greenfield stage. It's the most time-consuming phase in PV asset lifetime. So it takes sometimes up to 4 years to get all the necessary permits. We do everything in-house, almost everything in-house. So we have our own engineering teams, we have our own permitting teams, we have architects, we have, you name it, lawyers, finance department, whatever. And then when the project becomes ready to build, we enter into construction phase. We have our own EPC company, it's called Eternia Solar. So Eternia Solar builds all the projects for SIG, for our own needs, but also provides construction services to third parties for now only in Lithuania, as I've mentioned to you earlier already. And then carries on as an operation and maintenance provider to those assets that it actually builds. Yeah, so what I've just described here maybe is seen in a bit more detail, but again, we have mainly two steps in the project cycle. One is permitting stage. So we find the land, get all the permits. Once it's ready to build, we set up financing facilities which are abundant for this type of assets. So if you want to build a solar power plant, there's a lot of debt available in the market from debt funds, mostly, also banks, but debt funds provide much more flexibility, let's say it like that, as they specialize in this asset class only. So at that time, we do all the planning, do the engineering, buy, order the equipment, arrange construction teams, which we always subcontract, and then supervise the whole process until the project is connected to the grid, obtains the generation license or whatever it's called in a specific country. And basically that's it from that moment on. Then we only need to decide what do we do with that project. Do we want to sell it? The sale of a project is based on the value of the cash flows. So you are basically selling a certain IRR on the projected future cash flows. Or there is an option to keep the project on the balance sheet and generate revenue from energy sale. Yeah. As you see, our project portfolio is growing non-stop since 2019. We did a very big expansion in 2021, but then carried on considerably up to today, maybe with a little bit more focus now on Italy, as our Polish portfolio is already sizable enough. So we are more concentrated on finalizing the development of all the projects that we have and getting them ready for construction. Almost 300 megawatts. Maybe I'll talk about that once we get into the next slide. Yes, about the specific composition of the portfolios. Yeah, so Poland. First of all, why Poland? So Poland relies very heavily on coal for production of electricity, and coal, as everybody knows, is a very dirty source of electricity, actually the dirtiest one. And in the energy transition globally, coal is the first one of fossil fuels to be phased out. So that creates some very important pressure for Poland to do a transformation of their energy sector. And as they have more than 80% of their electricity coming from coal, so the challenge is substantial. What that also means is that on the long run, mid to long run, the energy prices in Poland are going to continue being higher than, let's say, in Germany, France, Spain, or other sizable countries, Scandinavia as well, for sure, due to their high reliance on domestic energy production, as there are not too many interconnections with other European markets, and the cost of CO2 certificates, yes, so which is steadily rising. So yeah, so those are structural reasons why Poland is a good bet for investment into renewable energy sources development. They have a bottleneck, which is the grid, which is also becoming a bottleneck in the whole Europe. So our portfolio has almost 300 megawatts of projects with a secure grid access, which makes those projects really attractive. And the only thing that needs to be done with them right now is actually build them. So we are preparing to build all that capacity in Poland, starting from 60 plus megawatts that we are going to build and commission during 2024. And the remaining projects will be built during 2025, as they are bigger in size, so they take a little bit more planning, a little bit more preparation, longer supply times for high voltage substations, so this is our plan for Poland. So Poland is also going to be the revenue source next year for us internally, as we are planning to sell those 60 megawatts operational and generate revenue and income for ourselves, also to repay the current bond issue. We can go on. Right, Italy. Why Italy? So Italy, again, is one of the biggest economies in Europe. So it makes a lot of sense for a company like ours, which with limited resources, that once we get in there, it offers us an opportunity to grow and expand. We're using the same knowledge, same team. And structurally, Italy also is somewhat similar to Poland, because it has limited capabilities to import energy from other countries. It is very heavily relying on electricity produced from gas. And well, gas is a global commodity, so, you know, prices are, let's say, impacted by a lot of topics that are beyond Italy's control. Yes, so as we can see today, also with the current energy crisis, yes, and the war between Russia and Ukraine. So yeah, so all those things impact them. But even before these big geopolitical events started happening, Italy still was a market with the highest energy prices in Europe. Yes, so, and they are locked in the situation for some time, carrying on into the future until renewables penetrate deep enough to push those prices down. The other component, which is very technologically related to us, is that Italy, being a European country in the south of Europe, has very big solar resources. So by installing the same generator, so a solar power plant of the same capacity, you get a much higher production if you are comparing it to, I don't know, Lithuania, Estonia, Poland even. So high energy prices and high productivity from the same invested amount makes it a very attractive proposition to develop solar power plants in Italy right now. We entered there at the right time in 2020. There were not too many developers back then in Italy, so we were able to grab good land with grid access, with decent grid access. So out of 600 plus megawatts that we currently have in Italy, well over 300 megawatts already has grid access secured. Yes, and I think we are gonna be at 400 plus very soon. So in the same fashion as in Poland, we are doing it all by ourselves in Italy. So we find land, we do all the engineering designs in-house, and then go through the permitting process. And once we will get ready to build those projects, which is gonna be sometime next year, towards the end, we will set up a construction team there as well, and we will just replicate what we already have done in Poland and Lithuania from construction point of view, as it's a little bit a universal approach. Yes, it doesn't really matter where you are building. Yeah, so that's about Italy. As I've mentioned, in Lithuania, we are mostly doing EPC services for third parties, so to end energy users mostly. But we also have a small development activity in the market through a sister company of SIG. It's connected through the top holdco. We have built 7.7 megawatts of remote PV plants, as they are called here in Lithuania, that are owned by a lot of small domestic consumers. We have 4.6 megawatts in the final phases of construction right now of same type of projects. And we have another 34 megawatts of these projects under development with main permits already secured. And that will be built during next year. So a little bit about Eternia Solar. So it's a company, it's a construction company and an EPC, so engineering, procurement and construction, with more than 40 people working in the company. It has built over 200 megawatts since its inception in 2017. More than 270 projects, individual projects have been completed. As you can see, the number of projects is higher than the amount of megawatts. And that is related to a fact that in Lithuania, the dominating type of project for Eternia was a rooftop project on factories, bigger or smaller, on some shopping centers or similar type of buildings. Yeah, so obviously on a roof you don't really install a very big power plant except for some individual cases. But so you can have 0.2, 0.3 megawatt projects on a normal industrial roof, and this is why we have more projects than megawatts. We have built 6 from the projects that can be mentioned here. We've built a 6 megawatt power plant for Ignitis, which is a Lithuanian utility that you probably know quite well. We've built a 10 megawatt plant in Poland for ourselves. This one was sold to Alternus Energy. Yeah, so this is the only company within the group that is producing steady income. So, it's our cash flow business, to call it like that. Yeah, in Lithuania, this EPC business is continuously going. So there's an intense energy transformation happening in Lithuania, and Eternia Solar is part of that transformation. Yeah, so this is the ownership structure of SIG. I own the majority of the shares within the company. Then we have a holding in Luxembourg above Sun Investment Group, which is the issuer. And yeah, then there's the issuer. Yes, so as we are in a business area that is growing really, really fast, globally, but also in Europe and locally in each country. So to take advantage of best opportunities and to be able to adapt to a constantly changing environment, regulatory or business, what is necessary is an experienced team. And as you see, it's an international team. You see 2 Spanish guys in the top team, and that is related to the fact that Spain is one of the leading countries in the renewable energy sector. So companies in Spain have done things ahead of everybody else in Europe when it comes to size of the projects, when it comes to technological solutions, financing, you name it. Yes, so Spanish companies are a bit ahead. Yes, So we tipped into that market, and we found really good profiles in there. So Enrique, for example, the COO of SIG, has 20 years of experience in renewables, not only PV, but offshore wind, onshore wind, green hydrogen production, batteries. So his last experience was, well, not the last, the one before, let's actually, but he was the COO of Greenalia, which is a listed company in Spain with offshore, onshore wind assets, PV as well. So his experience is really valuable contribution to group's growth. You can see the composition a little bit by type of, by the profile of employees. So we have 33 people dedicated exclusively to development. So sourcing land, applying for permits, managing relationships with local authorities. Then we have 45 people in the EPC team. So they are mostly concentrated in Lithuania. So we have installer teams here. Actually, it's the only market where we have installer teams. Then we have project managers, site managers, and then the people in administration taking care of legal, finance, marketing, and general administration. Yeah. So each of our markets is run by a country manager. And all our country managers are highly experienced in renewable energy and in PV energy, in solar energy specifically. So obviously, depending on the country, so the duration of experience is longer or shorter. So Lolita has the shortest one because it's the youngest PV market out of all that we are currently in. Giuseppe is running Italy with a vast experience in PV. So Italian PV market started really early. So it was in 2007, more or less. So he's there from the start, same as myself, actually. Adam, our new country manager for Poland, has a very valuable experience in big energy companies in Poland, so being at the board level or as a CEO of some daughter companies within those energy groups. So one of them is Tauron, which is one of the 4 big utilities in Poland, concentrated on the southwest of Polish territory, which is actually where we have our development office as well, in Gliwice. It's a town in the south of Poland, and he's been running also Fortum Power and Heat in Poland. You probably know Fortum, as it's a Scandinavian utility. So yeah, so he's been there for some time. Yeah, and that's it from my side.
Yeah, so in this slide, you can see the simplified group structure. So Sun Investment Group, VIB, is the issuer, and the main group company, the holding company, which operates through fully owned subsidiaries. And here you can see the basic split. So on top, here listed are the key operational companies. And on the bottom, you can see the solar PV development companies. So as mentioned, the key 2 markets. You can see 3 companies being pledged to the bondholders as a part of this bond issue. Yeah, moving on. In the next section, we're going to review the financials of the group. So perhaps the most important aspect to have in mind is the specific nature of the issuer's business. As already mentioned in the previous parts of the presentation, the main activity of the group as a whole is development of solar power plants from greenfield stage through execution of the construction works and the sale of the build projects. Therefore, significant revenues and cash flows are generated after the full development of the projects and the sale of these developed projects. This can take sometimes 2 years, but sometimes up to 3 and 4 years, depending on the project and the country. At the same time, the sales are made in larger lots, so not in 1 or 2 megawatts, because larger portfolios can attract bigger buyers, and this can get the best price for the assets. Therefore, the group's track record shows years when quite significant sales were generated, but also some years where the project sales were not made. This was also the case in the past couple of years, because the group focused on increasing the number of projects in ready-to-build stage. And as a result, no significant cash flows and revenues came from project sales in 2022 and 2023. Main income this year came from the EPC business at Lithuania Solar. As mentioned, it has a more recurring type of income. And if we look at beyond 2024, a very different picture is expected because significant project sales are already planned. More on this, we'll talk just a bit later. And naturally, in years when there are no project sales, but the group incurs development costs, there can be a net loss. However, the group sees this as an investment that will pay off itself in the short term, and also as a natural thing for a player in this type of industry. And just also one more point in this slide to note is that in the financial statements you can see 2 columns for 2021. This is because the group in 2022 adjusted its accounting policy in line with the latest recommendations of international financial reporting standards, where the value of the projects on the balance sheet is calculated only on the basis of the development costs incurred. So for comparative purposes, the financial results of 2021 have also been adjusted accordingly. In slide 24, you can see the group's consolidated balance sheet. As mentioned in the previous slide, the value of the portfolio in consolidated balance sheet is calculated taking into account only the development costs incurred. So in this case, these assets are recorded as intangible assets. And you can see here that at the end of 2022, the value of the portfolio exceeded 30 million euros. Compared to 2021, this value was around 12 million euros. This is more than double growth in 2022. So referring a bit to the last slide, even though there were no major project sales in 2022, the value of the portfolio itself increased significantly. And since 30 million recorded here is an estimate only of the cost experienced by the group, it can be argued that this value is a very conservative one. The group's own estimate, which is based more on current market prices, puts the value of the 2.7 gigawatt portfolio at more than 80 million euros. And such value is also reflected in the standalone statements, which you'll be able to see in a few slides later. Slide 25. In the next slide, you can see the consolidated equity and debt figures. You can see that at the end of 2022, the equity stood at 8.5 million, and in the first half of 2023, it increased to 9.5 million euros. So compared to total assets, in this case, equity represents around 20%, which is quite a solid level in such an industry. As for the debts, at the end of the third quarter of 2023, the total debt balance stood at around 30 million euros.
Most of these debts are obtained from private debt funds and placed not on the balance sheet of the issuer itself, but on the project subsidiaries that use these funds to cover development costs of specific solar projects. Of the total debt amount, about 14 million are short-term loans with a maturity of less than 1 year. And a brief comment that, in fact, action is already being taken to replace these development loans with construction loans. So as some of these projects are already well advanced, and construction of these projects is going to start, scheduled to start in the first half of 2024, these loans will be refinanced with the construction debt. In the next couple slides, here are presented the standalone financial statements and consolidated financial statements of the group. However, as mentioned previously, the issuer acts as a holding company, so that operates through fully owned subsidiaries. So it is generally more appropriate to look at the consolidated results, which have already been reviewed in the past couple of slides. And also on the balance sheet, just here to note that the portfolio in this case is valued based on market prices, and the value here is much higher, and that stands at more than 80 million euros.
And also it may be important to understand here that this valuation has been done without even taking into consideration the additional profit to be made on when the assets are built. So it's a rather conservative approach here.
In this section, we present and look at the bond issue, the details of the bond issue itself, and the key terms. So regarding the funding need, it has already been mentioned that the group has been growing the portfolio quite significantly in the past, in the recent years, and the issuer would see an opportunity to sell these developed project portfolios at the current stage as well. But in such case, the group will have to offer quite significant discounts to the potential buyers, even though it's above the yield of the bonds. So the issuer therefore sees an economic logic to borrow at 13%, invest the proceeds in further maximizing the value of the portfolio, which then portfolio would be sold at the ready-to-build and operational stages. So proceeds would be of this bond issue would be used to cover further development costs, and also to finance working capital related expenses, and diversify the sources of the working capital. And as regards with the redemption of the bonds, a significant part of the portfolio that was being developed in the past couple of years is expected to be realized already in 2024. So in the next year, the group expects to generate income from different sources, so namely sale of up to 60 megawatts of fully built small-scale power plants in Poland. So such transaction would generate proceeds of more than 50 million euros. Then this is followed by a forward sale of Polish portfolio of fully built power plants that are larger than 1 megawatt. In such case, it would be a forward sale or a pre-sale, which means that the buyer signs a purchasing agreement, makes advance payments, and provides final payment after SIG fully builds the power plants. And finally, the third source would also be a forward sale of portfolios of fully built plants in Italy. In this case, the portfolio ranging from 100 to 200 megawatts. So even if one of those previously mentioned sales would be carried out, it would be more than sufficient funds to redeem the bonds. And here we overview the collateral. So the bonds are secured with the primary pledge of shares of group's Italian subsidiaries. So these would be specifically SIG Project Italy 3, 4, and 5 entities. So these companies collectively control a portfolio of 340 megawatts of solar development projects, and these projects are in various development stages. So either secure the land lease agreements, obtain grid connection conditions, or submitted applications for environmental impact assessment. So obtaining this documentation is one of the key milestones of development in the talent market. So such a portfolio has real value for real buyers and market price. And as active developers in the talent market, Sun Investment Group has received various offers for their portfolios in Italy. And based on these offers, the potential market value of the pledge projects to the bondholders has been calculated. So on the right side of the slide, you can see a table, a more detailed list of the projects. So in total, 12 different projects, total size 340 megawatts. And you can also see the current development status of these projects and an expected timetable for further development. So according to the current development progress, the value of each project has been calculated. So it is appointed 25,000 euros per megawatt for securing the land, and additional 35,000 for securing the grid. So therefore, in total, the value of these pledge projects exceeds 12 million euros. As already also mentioned, in this case, the loan-to-value ratio for this 5 million euro bond issue would be around 40%. Finally, it is worth noting that until the maturity of the bonds, this value of the portfolio is likely to keep growing because all these projects keep moving into more advanced stages of development. So as can be seen also in the table, all of the projects are expected to receive grid connection conditions, which is really one of the most crucial value-adding steps in the development process. And throughout the year, some of the projects will reach even more advanced stages. So therefore, in that sense, the value of the collateral until maturity is likely to exceed even 20 million euros.
Yeah, thank you, Simas. And yeah, we are approaching the end of the presentation, but of course, very important thing is for all the investors considering the investment into these bonds, of course, to review the risk factors. The extensive description of all the risk factors is included both at the end of this presentation and available on the information document, which was already published. So we have risk factors which are related to the issuer and to the bonds. Of course, some of these are rather general, like dependence on the macro situation, dependence on VAT or top employees of the group. I would say, of course, what is most specific risk and one of the most important risks is, of course, related to the sector the company is in, so renewable energy development sector, which of course has some kind of risks attached to it, and namely, of course, the value of the projects can fluctuate dependingly on various factors, both electricity prices, both regulatory actions. As you see, lots of permits have to be obtained for the projects to be viable. Of course, as I mentioned recently, on a European level, there is an initiative to decrease the bureaucratic burden and to shorten, for example, even the amount of time which is needed to get ready to build stage of the projects. But nevertheless, since this is regulatory issues sometimes linked to the politics, of course, it can bring some unexpected changes. Of course, yeah, the development nature of the whole enterprise, these projects which are under development, we have to be finished. And yeah, this is, of course, one of the key risks carried on by the business. Moving on to the risk factor of the bonds, I would say that these are more or less standard ones. Credit risk, inflation, collateral risk, interest rate risk, and liquidity risk, meaning that since these bonds will be listed on the First North Stock Exchange, but of course, liquidity cannot be guaranteed, and the prices can be lower or higher when the investors decide to sell it on the secondary market. So finalizing with a term sheet, key points to note, what was already presented, that the issue is up to 5 million euros, being done as a public placement both in Lithuania and in Estonia. What does it mean? What has not yet been mentioned is, of course, that subscription procedure is rather simple, and investors willing to buy the bonds should approach the bank or a brokerage company with which we have opened investment account, and we can submit an investment order through any bank or investment company which has a link to NASDAQ system. So it could be SEB, Swedbank, LHV, and of course, if investors have preference, we can also approach Orion Securities, which would onboard such clients and enable them to subscribe for the bonds through Orion channel. Placement till 24th of November. So 2 weeks till the end of the placement. In case of oversubscription, what's maybe worth noting, we have a proportional decrease of the order, so meaning that it's not a first come, first served basis, but if we'll have oversubscription, pro rata decrease will be implemented for all the subscriptions obtained. As mentioned, bonds are secured with the collateral of the projects in Italy. We have no early redemption option provided for the company. The only one listed here is in case bonds will not be included into First North or will be excluded from the First North, which is kind of rather unlikely event given the fact that only 12 months of maturity is present. And as I mentioned, additional covenants just to increase the security of the bonds. Finally, listing is noted here that it's going to be within 3 months' time. However, the company has already is already meeting all the requirements needed for the listing. So we plan that it's going to be implemented much sooner, let's say within 1 month after the end of the placement period. So that's it for the presentation we have today. And now we can proceed with the questions. First one, the financials of Italian companies is not provided. How can we evaluate the value of collateral? Do the companies have financial debt? Are operations performed only with equity funds so far in Italy? So I guess we have covered quite a lot about the collateral. What's important to note that these companies, why we are pledging companies, not the projects per se, because actually all the projects are being owned by these special purpose companies. We do not have any other activity besides consolidating the projects. So that's why I guess investors should view that it's not companies, but rather the projects themselves are pledged. Do the companies have financial debt? No. The companies are financed fully by the group, so it could be intercompany group loans or simply equity funds. And as mentioned, we have even collateral that any third-party financial debt could be placed on these companies. As I said, since these are SPVs, we decided not to provide the financial accounts of these companies. However, if you are really in need to see it, please contact Orion through bonds at Orion LT, and we will provide you with these numbers. Maybe David, a short comment regarding cooperation financing in Italy. Could you comment? Are we finance only with equity funds?
Yes. So all our Italian development is free of any debts and external loans, and it has been developed using 100% of our equity.
What is the company's experience in Italy? Any projects completed? I understand that majority of projects were in very early stage, so repayment of bonds is not linked to Italian projects.
Yes and no. So in Italy we have 130 megawatts of projects that are in the final phases of environmental permit approval. So once that is done, and we envisage that will happen in the next 2 months, those projects will essentially become fully risk-free. And from that moment on, the only procedure left will be a building permit. But with all the intermediary integrations already passed. So more than 100 megawatts of projects will become ready to build in Italy before the maturity of the bond, actually. So it's a good chance that the bonds will be repaid also from proceeds in Italy. But it's not a given and it's not a necessity. As has been explained before, we are focusing on construction in Poland as a revenue creator, yes, through P&L. So that for sure is a very tangible, let's say, source of revenue. But at the same time, also maturing the Italian and Polish assets also creates more good quality collateral for project level loans as well. So just to broaden a little bit the sources of funds that could come into the company.
Another related question: what is the logic of using Italian entity as a collateral? Why not Lithuanian or Polish?
Because the projects all the project rights are being issued on the Italian SPV, because the asset is in Italy. It cannot be other way. So when in Italy, when we go and apply for a certain permit, for example, the right to connect to the grid, yes, so we do it on the name of an Italian entity, on the name of an Italian company. So this is where the value is, the free tangible value within the company right now. Because Polish assets, we have project level debts there with institutional investors already, and our fully available collateral is in Italy right now. So I would answer it like that.
Okay. Yeah, now a related question regarding collateral. Maybe we have touched on it, but it's good to repeat. Can you describe in detail collateral of bonds? Do these Italian companies own the land or rent it? If they own the land, then what is the market value of the land without the development activities?
So I can answer that as well, yes. So we have two types of contracts in Italy. Currently, we do not own any land in Italy at all in any of the projects, but in certain projects, the contract for land is not a lease. It is an option to buy the land on a pre-agreed terms already, clearly defined. But we only have an obligation to buy the projects once they become fully permitted, fully ready to build. And there is a certain period between 3 and 6 months from getting all the permits. We need to acquire the land.
Okay, yeah, maybe another related question. Have you had to pay guarantee fee when reserving the network in Italy? When will the reserved grid connection expire if the environmental permits are not received?
Yeah, so it's on project by project case. Of course, depends if it's a high voltage network or medium voltage network. But yes, all the projects that do have grid have paid certain grid deposits in Italy. But in Italy, it is slightly different from what it is, for example, in Poland or in Lithuania, where you have a hard deadline to do something. There, what you need is you need to start the next process. Yes, so if you have started the next corresponding process, there is always a very live communication with grid operators. So they are very much involved in. It's not a bureaucratic process, like a dry bureaucratic process when interacting with the grid operator in Italy. It is rather very open, fluid, and live process. So if a project is going, it's going. I mean, it's nobody's killing it.
Okay. Yeah, regarding source of redemption, what is the most realistic source of bond repayment?
Mm-hmm. So most likely it is going to be the sale of the 60 megawatt portfolio that we are getting ready to build in Poland. And besides that one, so yeah, also the forward sale of other projects that will be finalized in 2025. So as Mykantas has mentioned, not Mykantas, Simas has mentioned earlier, it would very much likely be a forward sale. So with certain advance payments from the end buyer, which is fairly a market standard practice right now in Poland, especially with Polish utilities, which are very active asset buyers. And information about those transactions is public as well, as they are public companies. So you can actually find that in the media as well, in terms of pricing, certain details of transaction, etc. So yeah, so it could be that as well, and it could be also coming from new loans that we could raise on a project level with the maturing of the value of the projects that we currently have in the pipeline. So we are constantly working on getting further permits, and as soon as you reach a next permit, the value of your project grows.
A related question, what's your plan B, I guess? Well, you have touched of it if you'll not succeed with the sale. So maybe a topic regarding alternative to build and own the plants.
Mm-hmm.
Yeah.
So yeah, so I've already mentioned the sale option of different portfolios in Poland in different formats. Then I've also mentioned the other option by getting more debt on the rise of the value of the collateral in Italy and in Poland. But also, as Mykantas is mentioning, there's also a possibility to keep the projects built in Italy, in Poland, initially, to keep them on the books and refinance them with a long-term facility that is higher, let's say, than the bridge facility provided to build those projects. Bridge facility can be anything from a year to 5 years.
Mm-hmm. Yeah, related question again to sale. Are there already any conversations with interested parties to acquire 225 megawatts in Polish ready-to-build solar projects?
Yes. So we have run an extensive process for the sale of projects at ready to build from the end of last year. And what happened during that time, the construction costs have fallen significantly all across Europe, mainly due to contracting module prices and overstocking of modules in Europe, and growing production capacity in China that is above the current global demand. Yeah, so this you can also find in the media. I mean, there are articles flowing around about producers of wind turbines and solar modules. So that kind of changed our logic that it didn't make sense for us to sell projects that's ready to build in Poland, that there is significant value to be captured in the construction phase right now. And yeah, so we've been talking to M&A advisors, reputable ones in Poland who are active in the Polish market, and yeah, so there is an extensive list of buyers with quite clearly defined price levels and terms for this type of asset. So we calculate that it would take us around 6 months to structure such a transaction as soon as we decide to kickstart the process.
Mm-hmm. Yeah, you touched a bit on the cost, so related question, CapEx costs are inflated right now, especially if your suppliers are European. Who are your suppliers and how are you keeping the costs under control?
Mm-hmm. So suppliers depend on what components. So obviously for modules and inverters, Chinese are dominating. You have top brands coming from China. So, you know, I don't know, Longi, to give you a name, for PV modules, Sungrow for inverters, and then on the mounting structure, it already depends a lot on the type of a project. And the price is also quite stable in that segment, and as they relate directly to raw material prices, so mainly aluminum or steel. And then there's always more or less a local component, which is a transformer station. So it's very related to what is happening in the domestic market in terms of grid works. So, well, we adapt.
So I guess it's also worth mentioning that you have Eternia. Maybe you don't rely for it for all your construction, but in general.
Actually, all of it. Yeah. So we rely on Eternia for all of the construction. So obviously, when it comes to SIG construction costs, they are significantly lower than, let's say, comparing to construction costs of some financial investor who needs to hire a reputable EPC counterparty with bankable guarantees, etc., etc. Those are not cheap. So SIG has its structural advantage by having an internal EPC company. That is the biggest saving provider and cost control measure for sure.
Mm-hmm. Coming back to Polish sale, very specific question, good one. What is currently the IRR for the investors if they buy your Polish development and assume feed-in tariff as the power price? So maybe a bit comment about feed-in. Is it still alive or not? Mm-hmm. And later on about the yield.
Mm-hmm. So it very much depends on who you are selling to. So if your buyer is a Polish utility or Polish or big Polish corporate that is a high energy consumer, they don't need any PPA because they will offtake that energy by themselves. So that's for starters. They don't need any feed-in, they don't need any PPA, they don't need any offtake strategy. They just need a generator. And then when it comes to IRR, listen, it's the same asset with the same power price. Actually, yes, which power price curve are you going to use? You know, is it gonna be Baringa? Is it gonna be Afri? Is it gonna be a central? Is it gonna be a low or high, a blend of high and central and between various power curve providers? It's you will get very different, let's say, IRR number. So let's say on most central scenarios that you would use, it was let's say before the interest rates kicked in full force. Yes, the ECB and WIBOR in Polish case. So the usual was between 5 and 6 IRR on a project level. Right now, obviously, that is higher, but to tell you exactly, it would be difficult, but I would say like 8-9% probably on project level. But you also need to understand that power prices are significantly higher right now in any price curve that you are going to look, and in reality, in real life. So if, let's say, before the energy crisis happened, the power prices were at, I don't know, 50 euros, 60 euros per megawatt hour. Now it's above 100 in almost at any day. So yeah, so one thing compensates the other. So the values actually in real euros per megawatt of capacity have remained relatively stable for PV power plants in Poland.
Yeah, maybe moving on to more general questions. In coming 12 months, are there plans to expand the existing 2.7 gigawatt project pipeline?
For sure, yes. So as our main strategy is not buying projects from the market, but actually creating them in-house. So all our OPEX at group level is actually an investment into new projects and investment into existing projects. So for sure, we will continue expanding the current pipeline. And probably with a bit more focus on Italy than on Poland, as I mentioned already before that, we have a very significant pipeline in Poland already. And but yeah, for sure, we are going to continue growing it.
Did you record any profit from the sale of 43 megawatts portfolio to Aberdeen, and how much was it? Was it retained in the business?
Yeah, so we haven't paid out any dividends since 2017. So all the profits that we make are within the company. How much did we make from 43 megs? I cannot tell, but it's in the balance sheet. It's in the equity, yes, it's within the equity that you see.
Okay. What is the reason for entering Spain market? I see it as a rather competitive market for solar project development with strong local players.
Spain?
Yeah.
Yes, you are totally right about Spain. So we are not aggressive in Spain at all. We as I mentioned during the presentation, we have a few key members of the management team located in Madrid, and we are planning to expand our Madrid office. But not the expansion is not going to be related to Spanish market per se, but rather as another competence center within SIG, simply because there is abundant talent in the PV industry in Spain. When it comes to the market itself, so there was a big boom in PV project development, but Spain has an open issue with grid access. So getting grid access in Spain is quite complicated. Legislative changes need to happen. They are not happening quickly. Spain is not very stable politically right now. So we are, through our presence in Spain, for sure we will be able to take advantage of any opportunity that comes in Spain when it comes. But right now it is not our focus to do some investments or developments in Spain. There are better places, Italy for sure being the best right now.
Mm-hmm. Yeah, we have a follow-up question regarding Aberdeen. Question about Aberdeen transaction was caused by the fact that by the end of 20, you had very limited equity, and most of the equity was generated by the capitalizing of the cost. So if you did not make money with Aberdeen transaction, and what will guarantee that you will be more successful in the future?
And also we made how do we generate profit? Yes, how did we generate profit up to now? So Aberdeen transaction is one 66 megawatt transaction with Lord's Asset Management, the other Eternia Solar selling EPC services, the other profit center. Then we made quite a handsome profit on the 24 megawatts that we have sold to Alternos Energy. Yeah, so I mean, it's a repetitive process. On each transaction that we did, we made profit, and we are planning to continue doing that.
Okay. You mentioned that private debt is on subsidiary level. Any recourse to the mother company in debt documentation?
No, there is no recourse. It's purely project level debt.
Mm-hmm. Yeah, we have some questions about the collateral, so maybe I'll just repeat that. Is there any debt on pledged collateral SPVs? So no external debt, of course, shareholder loans and funds to finance the activities are there, but no any external debt is present. Can you provide revenue and net profit guidance for 23 and 24? So maybe I'll answer because I don't want to allow Davidas to answer, because as you know, when you have a public offering, you cannot provide any forecast unless it's audited. So I guess you can see in the slides what are the planned proceeds which are going to be used for the redemption of the bonds. So the numbers which are on the slide are, I guess, the only guidance we can provide at the moment. What is the megawatt capacity that is currently managed under Eternia O&M services?
The capacity that is currently managed?
Yes.
I can't tell you exactly right now. I would say that some 60 plus megawatts for sure, probably something more towards 100. Yeah. Mm-hmm. Between 50 and 100. I can't tell for sure now.
Yeah. Yeah, and another question, rather not technical, are production capacity and consumption capacity the same in your secured grid connection agreements?
Production capacity and consumption capacity?
Yes.
I don't know.
I mean, maybe that's an issue which we had in Lithuania, where you have higher installed capacity of the solar plants related to what you can provide to the grid according to the
so that's the AC/DC ratio, if we are talking about that, because consumption itself is really low on a power plant when related to the output power. So it's never the same. But when it comes to module capacity and export capacity to the network, it's always slightly different. So it's between 10 and 30% oversizing on the PV module capacity compared to the transformer station capacity, which is the maximum power that goes into the grid. So if you have 1 megawatt capacity to inject into the grid, your PV plant is going to be 1.1, 1.3 megawatts, somewhere there. In some exceptional cases in Poland, it's 1-to-1, but it depends on the operator.
Okay, and yeah, this was the last question, and I see that we have taken quite a lot of pressure time of investors. So I would like to thank you for listening to our presentation. Thank you for really good and high quality questions. And as I mentioned, the subscription is taking place till 24th of November. And we invite you to submit the subscription orders through the investment bank of your choice with whom you have agreement and who has an access to the Baltic equities market. Thank you very much.
Thank you. Bye.